Hello, this is Steve Sanangelo from the SRS Rock Report, and today I've got a new video update. I'm going to discuss the amazing untold facts about gold and silver investing, including information about the precious metal industry. Now, I don't believe you're going to find this analysis anywhere else in the precious metal community or on the internet. So if you understand this information, you're going to know better why it's important to invest in physical gold and silver, especially silver. So let's get started. Now, I just wanted to let the YouTube viewers know that I also have the SRS Rock Report website, and you can get there by going to www.srsrockreport.com. Now, we put out between 2 or 3 articles a week, put all the videos there, and we like to focus on the precious metals mining, investing, the economy, and energy, and that's my major focus. Now, many websites take other authors' articles and they post them on their website. That's how they generate traffic. What we do is we put out the majority of original articles and we do all the research. And it takes a lot of time and effort to do that. So if you would consider supporting the SRS Rock Report website to keep it public, it's not a subscription service. The memberships are to support the public for the benefit for the public. And you could either go to Patreon or PayPal, and you could get there at the membership section of the website. Now, I did a video last week called The Tremendous Hidden Value in Every Silver Coin, and there were a lot of questions, especially about the energy content in a gallon of gasoline. So I did an article about that, and I'm going to include a little information about that in this video to kind of clarify some of the questions. Now, before I do that, I just wanted to show in my last 2 videos, the last one, it was 19 minutes long, 19 minutes and 4 seconds, only 52% made it to 18 minutes and 30 seconds. About half didn't watch the whole video. And I thought, well, maybe the video is too long, but if we go back to the prior video that was 8 minutes and 11 seconds, 52% watched 8 minutes. So it doesn't matter how long it is. It just seems as if a lot of people aren't interested in watching the whole video. And I do believe some of the questions and replies were due to people not watching the entire video, assuming certain things. So it's important that you watch the entire video to understand the information. And what sets me apart from the overwhelming majority of precious metal analysts is I believe that each silver coin, and including gold, act as a bank of energy equivalent value. Now, some commenters said, well, so silver and gold contain energy? No, they don't. What they do, they contain or represent an equivalent energy value in the economy. And that could be raw energy like buying gasoline, paying human labor or services, or it could be a product, shoes, cars, etc. There's a lot of energy that went into the production of those things. So basically, what makes gold and silver money is they are stores of this energy equivalent value, where paper money and M2 money supply are debts. And when you understand that, you'll understand why it's important to invest in precious metals. Now, again, I don't believe people understand how important energy is because we take it for granted. We get up in the morning, brush our teeth, it takes energy. We want to have toast and eggs, you got to plug the toaster in, you got to get the eggs out of the refrigerator, put the oven on. It all takes energy. You take a shower, you get in your car, you have gasoline. So everything is energy, but we all take it for granted. We don't even think about it. So I wanted to show how much energy is in this gallon of gasoline, and I'm going to explain that. This comes from Mark's Standard Handbook for Mechanical Engineers. It's the 11th edition, and it's muscle-generated power, and it's on labor. And it says, of this total expenditure, approximately 1/10 horsepower, or 75 watts, is available for useful work over an 8-hour period. And if we go to rapidtables.com and put in 1 horsepower, it converts to 746 watts, and 1/10 of that is 75 watts, which is human labor. Now, to convert it to BTU'S, which I'll show you for the gallon of gasoline, 1 horsepower equals 2,544 BTU per hour. And 1/10 of that, which is human labor, equals 254 BTU per hour. And we go to this table to convert gallons of gas to BTUs, we get 114,000 BTUs. So 114,000 BTUs contained in 1 gallon of gasoline divided by 254 BTUs, 1 hour of human labor, equals 449 hours of labor per gallon of gas. I said 500, there's a range, but you could see it's very close. And I don't believe people realize this condensed energy in a gallon of gasoline or liquid petroleum. Now, Jean-Marc Jancovici did the same thing in this update in front of the OECD. He explained that classical economics that has been around since 200 plus years is totally meaningless because they do not factor in the resource. And here he shows that the human labor acts as 1, the machines are 200. And he's also taking into account the loss of the energy from gasoline or diesel that drives the machines, the loss in the heat in the energy usage. So again, the machines that drive the world are 200 times that of human labor. I'm going to put this in my article on my website, and I'll link it there. Now, why is that important? Well, gold and silver have been traded as commodities, but they should be valued as money. But right now, they're being traded as commodities, and most everything is being traded as a commodity. And if we look at Pan American Silver, I've shown this chart before, but I want to explain it because you'll understand better. That the blue area, the shaded area, is Pan American Silver estimated total cost break even. The white line shows the realized silver price on an annual basis every year that Pan America received. And then right here, this line shows the profit per ounce or the losses in red per ounce. And if we average it out over a 12, 15-year period, Pan American Silver averaged about $1.50 an ounce. So if we take all the supply and demand and throw it out the window, we could see that the silver market price was very close to what Pan American Silver, their cost of production. And in this next chart, I show you why that's the case. I'll show you why supply and demand, what their driving force is. If there's more demand, it pulls the price above the cost of production. And we could see here in 2010, 11, and 12, there was a lot more demand for silver. So it pulled it well above the primary cost of production. But when there's less demand for silver, then it pulls the price below the cost of production. And we see this more with silver. Silver is more volatile because there's a lot of industrial demand. But again, all supply and demand forces they pull or above the cost of production trend line or below. And this is true for most goods and services. And if we look at Barrick and Newmont, this is a chart of Barrick and Newmont's cost of production versus the gold price. And I've shown this a few times, but it's important to show it again. And here we can see the production cost that's in the gold bars, and then the market price is in the little dollar bars, that after the 2007-8 financial crisis, there was a lot more demand for gold, and it pulled it above the cost of production trend line. And then we could see it's fallen, but now it's heading back up again. So again, the cost of production is the floor. And I think when investors understand these energy dynamics, we're going to see gold and silver move well above the cost of production won't matter. They're going to transition from a commodity to money, especially silver. Now, again, here's another factor that's not really discussed by the precious metal analysts. The estimated top primary gold and silver miners' total production cost and cost ratio for 2019. Now, this is Barrick and Newmont for the first half of the year, about $1,200 full, all costs, about $1,200 an ounce. Well, Pan American was $14. But if you add all the other primary silver miners, it's about $15. So if we divide 15 By 1200, we get this 80-to-1 ratio. Well, folks, that's exactly how the market is pricing in silver and gold. They're basing it not because there's the 1-to-10 ratio, 1-to-9 ratio of gold to silver production, but they're basing it on the cost of production. And this is going to change in the future when investors start moving into physical metals to protect wealth. Now, again, this is the reason why that 80-to-1, we can see right now it's 87. I believe today, this morning, is 89. And so, again, this is why gold and silver are priced this way. They're being priced on their cost of production as a commodity, not as a monetary value. And I mentioned in that last video that there's a lot more energy that goes into the production of gold. And if we just look at the liquid diesel and gasoline that is consumed by the top miners, Barrick versus Pan American Silver, gallons of fuel consumption per ounce of metal produced. In 2018, Barrick consumed 32.7 gallons of diesel and gasoline and fuel oil to produce an ounce of gold. Pan American Silver only consumed a 0.63 gallons, not even, let's say, 3/4 of a gallon of gasoline to produce an ounce of silver. So Barrick consumed 50 times more fuel per ounce production than Pan American Silver. Now, if we include all the other materials, capital, labor, it's about 80 to 100 times. That's why gold is being priced much higher. It's due to all the energy consumed in all stages and in all forms. Now, that is the commodity price mechanism of gold and silver. However, there's the monetary value. And I believe this is why silver is going to be the go-to asset in the future when energy becomes problematic. And I believe energy is going to become problematic a lot sooner than people realize. So this chart shows us the government gold versus silver official holdings. And as of 2018, there was over 1 billion ounces of gold held by the governments, their reserves. Only 89 million ounces of silver are owned by governments. So here's the interesting thing. The value of gold is about 1.6 trillion compared to the value of silver, 1.6 billion. So silver is 100 times less held by governments compared to gold. Now, also I mentioned in the last video, when we look at how much above ground identifiable silver and gold investment stocks, there's not that much more silver. It's about 2.5 billion ounces of silver compared to 2.4 billion ounces of gold. And right now, silver is only valued at 45 billion compared to 3.7 trillion in gold. And this is what it's going to come down to, the availability. Just as I mentioned in the prior video, that there's so much demand for palladium that there's not much supply of it. And there's actually deficits. When people move to actually invest in physical metals, not the paper is going to become problematic. There's just not that much more silver. So again, each silver coin is a bank of energy equivalent value. And because the value is so low now, it's off the radar. People have no idea how valuable silver is. So I wanted to thank you for watching this last video update. I'm going to be providing more information about this. It's important that you understand that energy drives the economy. Energy drives the GDP. And when U.S. shale oil production peaks, global GDP will peak, and I believe peak for good. And it won't take the decline of much percentage in oil production where this highly leveraged Ponzi scheme economics of fiat money, debt, derivatives. It won't take much of the decline in global oil production to totally destroy, collapse the whole highly leveraged paper financial system. And that's when it's important to be holding physical gold and silver. So, and I don't believe this is going to take 5-10 years. I think we're going to start to see a lot of fireworks in the financial system within the next several years. Well, thank you. And if you have not yet subscribe to the SRS Rock Report YouTube channel, please consider doing so. Thank you.